Hi, Ron Benning here with the Sacramento Duplex market update for the period ending November of 2025. In this video, we'll look at key developing market trends and what the break-even GRM is for a Sacramento duplex. These trends will help you understand where the market is and where it's likely headed over the next few months. So watch to the end to see what's likely to happen. And don't forget to subscribe so that you don't miss out on any of my key information over the next few months. November 2025 was officially a neutral market for Sacramento duplexes. The month supply of inventory based on closed sales came in at 3.3 months, which is down 5.8% from last year, but up 21.9% compared to October. So even though inventory tightened earlier in the fall, we saw that number tick back up a bit this month. When looking only at pending sales, month supply is 2.4 months, which is still technically a seller's market. And I'll come back to why that distinction matters later in the video. November had 25 closed duplex sales, which is up 13.6% from November of last year, but down 26.5% from October when we had 34 closings. So what's causing this softening? I'll get to that in a moment, but first let's look at pending sales because that gives us an early read on the buyer's behavior. We had 35 pending sales in November, the same number as last month. However, pendings are up 66.7% from this time last year. So even though closings slowed in the last 30 days, buyer activity is still holding steady month over month and is significantly stronger than last year at this time. But whether that strength continues is going to depend on a few things that we'll cover next. Active inventory has been declining for several months now. A few months ago, inventory peaked at around 130 active listings. But by the end of November, we were down to about 82 active listings. That's a 10.8% decrease from last month alone. However, inventory is still 9.2% higher than last year at this time. This combination is unusual. Lower short-term supply and higher long-term supply, which is why the market is behaving in such a mixed way. Despite inventory dropping, months of supply based on closings still ticked up. And that's because sales slowed down faster than inventory came down. This is a good example of why no single statistic can predict the market by itself. The average for sale price increased to 708,000, which is up 4.3% month over month and 4.6% year over year. Meanwhile, the average sold price was 621,000, up 3.2% from last month, but down 2.8% from last year. This widening gap between what sellers want and what buyers are willing to pay increases the risk of a larger market swing in the coming months. This mismatch is one of the big reasons the month supply reading moved up, even though inventory levels went down. The average days on the market is now 52 days. That's down slightly, 7.1% from October, but nearly double what we saw last year. It's up 79.3 year over year. This tells me that well-priced duplexes, or at least many of them, have already sold, and a larger percentage of the remaining inventory is overpriced. Buyers have more time and are shopping a bit more and negotiating a bit more. Buyer bargaining power. The sold to original list price ratio held at 96% this last month, up 2.1% month over month, but down 1% compared to last year at this time. This translates to about a 4% buyer bargaining power. Even in a neutral market, that is meaningful leverage for buyers, and I called this trend a few months ago. For the past several months, interest rates have been the primary driver of the duplex market, and that will continue to be the case. At the start of the year, Freddie Mac conforming 30-year rate was 7.04, and it continued to move down in August and September. But in November, that trend flattened, and it was about 6.375 near the end of the month. And with the average rate only dropping about 0.12%, or roughly an eighth of a percent that month, this leveling off of rate improvement is a major reason that pending and closed sales softened a little bit in the past 30 days. My opinion, and I may be wrong, is that many buyers who are waiting for better rates are likely be disappointed because dramatically lower rates probably aren't coming in the near future because inflation has been creeping up again. As it hovers towards 3%, a continued increase in inflation may actually lead to rates going up. So right now it's really volatile on what's happening on the rates, and to expect a dramatically lower rate in the short term is probably not realistic. Recently, my lender quoted a client a 6.375 investor loan with no points, assuming 25% down and an average sale price around 621,000. The break-even GRM for November for a duplex is 12.13. Now, looking at the sold GRM report for November, about a third of the closed duplex sales last month had a break even or better GRM, meaning that they had positive cash flow potential from day one. Interest-only loans can also help improve cash flow while rents rise. As of today, there were at least 10 duplexes on the market with a GRM below the initial break-even threshold. Heading into the holidays, I believe, based on our current pending sale numbers, that December sales will increase compared to November. I believe inventory for duplexes will tighten between now and the end of December. I believe that we will see a significant increase in duplex inventory before the end of January, though. There is no doubt rents have been coming down in the Sacramento market in 2025, with typical duplex rents down around $100 to $150 a unit compared to 2024. This will put pressure on sales prices over the next 6 to 12 months. For whatever reason, in the short term, sellers seem to be pricing properties higher right now. Considering rents are down across the board in Sacramento, this will likely lead to more inventory, longer days on the market, and a large amount of inventory being on the market but unsellable. I believe that rates will probably stabilize somewhat over the next couple of months. Pending and closed sales will likely remain below historical average during the holidays. Because of the expectation gap between sellers and buyers on their asking and what the sales prices are, I would expect the average sold price to drift down a little bit over the next couple of months unless interest rates drop meaningfully. If rates go up, it will further cool an already fragile market for buyers. Still, for buyers, there's a real opportunity right now. A third of the duplexes that sold last month sold with a break-even GRM or better. Buyers have about 4% negotiating power on average. Inventory is still higher than it was last year. And sellers of overpriced listings may become more motivated as the days on the market goes up. If you're not already receiving my GRM report, look in the description or scan the QR code on the screen to get started. For sellers, prices have been going up for a long time. With a softening rental market, though, I believe the price run-ups, at least in the short term, are over. If you'd like an updated valuation on your property or a rent analysis, scan the QR code or look for the links in the description below. This may also be a good time to explore a 1031 exchange into a stronger rental market or better conditioned properties. I published a video recently on how to reposition equity using a 1031 exchange. Check the description for that link as well. Whether you're planning to buy or sell in the next 7 days or 7 months, give me a call or a text. I'd love to help you plan a smooth and profitable real estate transaction.